Hello and welcome to Asking for a Trend. I'm Josh Lipton, and we're diving straight into another big tech earnings report here. Apple's fourth quarter results, they are just hitting the wire. Let's take a look at what we got here. Q4 EPS 185, so the street was at 177. Top line, Q4 revenue 102.47 billion. Street was at 102.19 billion. I'm looking for greater China revenue, always in focus. That looks like 14.49 billion. The street was closer to 16.43 billion. iPhone revenue, there it is, 49.03 billion. That's up 6% year over year. I don't see a compare yet on that. Looking at others, let's look at Mac revenue, 8.73 billion. Street was at 8.55 billion. Wearables, home and accessories, 9.01 billion versus around 8.6. Services, also in focus always. Higher growth, higher margin, 28.75 billion. She was at 28.18 billion. As always, we would look for guidance on the call. Apple not giving specific formal guidance as we know typically, but they do give greater detail about what's to come for that all-important holiday quarter. Well, joining me now to dissect Apple's quarterly results, got CFRA research analyst Angelo Zino. Angelo, the numbers are just hitting the tape right now. Give me that instant analysis and reaction. What do you make of it?
Yeah, so Josh, thanks for having me. I'd say, just on just looking at it initially here, I think you look at the top line was fine, bottom line was fine. I'd say definitely a little bit light in terms of iPhones, and definitely a miss as far as expectations in China. And I'd say on the positive side of things, services did exceed our expectations. We were looking for about 13% growth, and it looks like it got a couple points above that. So, I think there were some good positives and negatives. I think really if I were to pinpoint one thing that seemed like it was a pretty big miss, it was that China number.
And what do you listen? We're going to listen to the call, obviously, Angelo. But what do you chalk that up to? But obviously, for an Apple investor, you make a beeline to China every time because it's that key link in the supply chain. It's a key end market. What are the puts and takes there? What do you want to know more about on that business, how it's performing?
Yeah, I mean, listen, I think the September quarter is always an odd quarter because you've only got a couple of weeks as far as the new phone is concerned, right? And it is more supply driven than it is demand driven. So I think the commentary for the December quarter is going to be a whole lot more important than what they actually posted here for the quarter. And who knows, how much inventory they kind of really had to deplete potentially in China, so looking at sell-in versus sell-through. So there's probably a lot of moving parts as far as the September quarter was concerned in China. But it is going to be important because we saw some very good growth actually come from China in the June quarter. The belief was it was going to sustain into the September and December quarter. So we do want to hear from Tim Cook. We want to hear that enthusiasm as far as China is concerned. The expectation, again, was that it was going to be the base model that would really kind of drive the China demand. And again, we want to hear that from Tim Cook. But outside of that, also, when you look at the iPhone numbers, in its whole, it did miss as well. So again, what does that momentum for the Pro devices here look like for the December quarter relative to the September quarter, and especially in the U.S. and these Western markets? Yeah,
you listen, Angelo. You point out correctly, of course, that it's critical for Apple investors. They're going to be listening to that call because you do want to hear that all important holiday quarter. What do Apple execs have to say about the color and commentary they provide there? In terms of, listen, Another note that skeptics, of course, Angelo, have been bringing up, including on this program, is the AI story. And the skeptical take that they'll say Apple doesn't have an AI story, doesn't have the compelling AI strategy that perhaps other rivals do. Listen, you cover Apple. You're bullish on Apple. What is your response to that?
Yeah, I mean, and if you're a bear, or if you're a bull, you're probably not going to hear much convincing as far as the AI story is on this call, because that's just not the way Apple works, right? I mean, you typically have to wait for a developers conference or some sort of rumors coming out, ahead of that event, really to get any gauge on what they're doing on the AI side of things. So you're not going to hear much as far as the AI story is concerned. What you do want to hear is the tone from Tim Cook. Make sure he's enthusiastic about that AI story and convinced that they are going to get that AI story right going into 2020. 2026 ahead of that developers conference, because really that's really all we can hang our hat on right now as far as this call is concerned. But that being said, I mean, we do expect them to get this story right. It's 2 years in the making at this point in time. They're either going to get it right, with internally, with whatever internal initiatives that they've done. But more importantly, we do think that they've got to have a backup of a plan at this point in time. And whether or not that's, Gemini with Alphabet or something else, we do think that we need to hear something, at least from the perspective of the tone of Tim Cook, that he remains enthusiastic and positive that we are going to see an AI rollout in 2026.
Yeah, I do see the compare there now, Angelo, on the tape for that Q4 iPhone revenue. 49.03 billion. Your colleagues on the street consensus, Angelo, was closer to 49.33 billion. So that did undershoot there. We're going to have to listen on the call in terms of the puts and takes the execs see now and ahead. What about the services revenue, Angelo? Listen, investors also pay attention to that. Faster growing, higher margin. That looks like it did beat, as you point out. So 28.75 billion, analysts 28.18 billion. What are you modeling for that division looking ahead?
So we've been modeling, for the most part, about 12 to 13% consistent growth here, going into 2026. Again, we need to hear something along the lines of that from Tim Cook. It has been a bright spot here for the company for years now. And, there was some concern earlier this year that maybe the services growth would not be able to sustain those levels, a lot because of the uncertainties, whether it be, related to the Google search monopoly case or whether related to Epic Games and the outcome there. But that being said, for the most part, it seems like Apple has really kind of gotten the outcomes that they wanted at this point in time. And, services growth should continue, we think, to, at the very least, grow at about a 12 to 13% pace here, we think, over the next couple of quarters.
Angelo, always appreciate that instant analysis, sir. Thank you.
Great. Thanks for having me, Josh.
Stick around. Much more Ask for a Trend still to come. Breaking news, Netflix announcing it is splitting its stock. And Netflix shares jumping in after-hours trading here. It's a 10-for-1 stock split, meaning every share that someone owns, they will now have 10 shares. While the price of the stock will appear lower, the value of someone's investment will stay the same. Companies often make this move when the price of the stock gets high, and Netflix closed on Thursday just above $1,000 each. Stock is currently one of 10 stocks in the S&P 500 with a price above $1,000. Company saying in a statement, the split will make the stock more accessible to employees who participate in the company's stock option program. Trading on a split-adjusted basis is set to begin Monday, November 17th, and applies to shareholders of record as of the close of trading on November 10th. Well, the wildly popular GLP-1 medications are a moneymaker, but does Eli Lilly want investors to only think of them in the obesity drug space? My colleague Julie Hyman sat down with Eli Lilly's chief financial officer for more.
A very strong performance for the quarter, growing 54% versus the prior year, and upgrading basically our guide for the full year. Your question about the GLP-1s and incretins portfolio, of course, is front and center of the growth that we have. But you mentioned we have a breadth of a portfolio. We operate in 4 big therapeutic areas, including immunology, oncology, and neuroscience as well. And all those products, the rest of the portfolio is actually growing double digit as well for the quarter. So we continue to make progress not only on the incretin side, but also on the rest of the portfolio. And we have a breadth of the pipeline. Dan alluded to this during the earnings call that is across all the therapeutic areas. All of that said, yes, the obesity drugs did see very strong demand in the quarter as well. How are you thinking through that demand in terms of distribution, in terms of the patients that have accessibility to them, and where do you see future growth as a result of all of that? Yeah, we operate, as you know, again, we launched in the US a few years ago, and now we are expanding the launches on all US markets. We mentioned during the call that we are now present in 55 markets with tirzepatide. So very excited that we are bringing this solution to all the patients around the globe. And we operate in different channels. Of course, again, front and center is how we continue to provide access to patients across the different channels in the US, Medicare, Medicaid, but also on the commercial front. And we continue to make progress across each one of the segments. In particular, very excited to see also what is our Lilly Direct portfolio that is direct to patients, direct to consumers, that we continue to grow extensively. This quarter actually grew 70% versus the prior quarter. So continue to see an acceleration of growth on that channel. That is an easy way to reach basically patients and go directly. As long as you have a prescription, you can get the product delivered at your home. We actually announced yesterday also a partnership with Walmart that we are bringing this product as well, that patients can pick up the product at the Walmart store around the United States.
And I was going to ask you about that Walmart partnership and that sort of how are you thinking about the balance of accessibility and price? What is most important in the marketplace right now?
Yeah, of course, there is an elasticity in the marketplace with regards to these molecules. How we think about it is if you look at, I think the best proxy that we have is this Lilly Direct platform. We have a price and a starting point at $349. Basically, it's a very competitive price if you think about the benefit of the products. And we have actually more data coming out there about tirzepatide and the new products coming into place as well, that we bring basically more solutions to patients on this channel as well. So we think about the elasticity of the product. We feel really good about the growth that we are seeing and giving access to more patients, not only in the US, but also globally.
And, you know, when you look at the potential for these products, I know that you said on the call today, one of your colleagues talks about the studies that you're continuing to do on tirzepatide, not just for obesity, but for types of addiction, for example, alcoholism. So how are you internally viewing the potential of these medications?
Yeah, well, again, I think we are just scratching the surface of the potential of these incretin molecules. And again, we announced it all today that brenipatide, that is another asset that we have in the portfolio that we are going to be doing studies for alcohol use disorder. And they've alluded to this, that we are exploring also other addictions as well, including opioids. So we are exploring in multiple ways how these incretins can benefit basically patients in different therapeutic areas. We also have actually I am announcing studies, for example, in immunology. We are running studies in combination with Taltz, and we have studies that we announced today as well with Ombo for ulcerative colitis, as well as Crohn's disease as well. So we are expanding and looking at this incretin class across the different therapeutic areas.
How is supply going at this stage, and is demand still outstripping supply, or is it in better balance?
We are in a very positive and good situation at this time. We are shipping to all our wholesalers globally every single day. So we are in a good position to continue to supply the market. Of course, we are ramping up our capacity as well. And this has been a multi-year investment that we are doing. We announced new sites as well. One, in fact, this week that we are expanding in Puerto Rico. 2 new sites in the US, one in Houston and Virginia. So not only we are supplying every day, but we're thinking about mid and long term and expanding our footprint and capacity to continue to supply the demand and the marketplace.
I'm curious about pricing because, as you mentioned, a lot of folks are going through the Lilly Direct platform. Is there any concern about in an economic downturn that people might then pull back if they're not, for example, buying it through insurance?
Yeah, well, of course, we continue to work with employers and insurance directly to continue to expand the access as well there. And again, patients can get the products as well. In fact, last quarter, we announced also a new program that just started. So it's early days to give any perspective about the performance, that we call it frictionless PA, that basically starts sharing the cost between the employer and the employee about getting access to these obesity medications as well, to tirzepatide, having an access and in a different platform. But again, we continue to make progress and working with the PBMs and employers to get more patients into these medicines.
Stick around, much more Ask for a Trend still to come. Consumer confidence continues to decline with short-term expectations weakening for income, business, and labor market conditions, with consumers rethinking how they manage everyday expenses. We're breaking down the spending landscape with TD Bank Head of Credit Cards and Unsecured Lending. That would be Chris Fred. Chris, great to see you.
Thanks for having me.
Maybe start big picture, Chris.
Sure.
Based on the data you're seeing, how would you just generally characterize the American consumer right now? How healthy, how strong? And does that depend, Chris, on which consumer we're talking about?
Absolutely. There's a nervousness, obviously, that's out there. We had recently done some research to suggest that 90% of the people were worried about inflation and adapting their behavior. But I think in general, what we're seeing is, despite a nervousness and anxiousness around the economy and inflation and prices, the U.S. consumer remains pretty resilient in terms of adapting, in terms of just being able to be flexible with their payments, with their spending to make it through. I think what you really see now too is people continue to have jobs and they continue to be able to make ends meet in large part. But really where the challenge becomes is as that creeps up, there's more and more challenges that consumers will need to deal with.
When you look at the data, Chris, do you have line of sight in terms of spending, what they're spending on, and is that shifting?
Not sure if it's necessarily shifting as much as, everyday items tend to become much more prominent in people's minds. So gas and groceries in particular is an area where, continues to pop in terms of when we ask consumers, how are they feeling about, what they're spending on, and groceries is always up there in terms of the top, in terms of the worries.
Do you see more evidence, Chris, you'll hear about this, that consumers now focus more on buying what they need rather than what they want? Is that showing up in your data?
Oh, absolutely.
It is.
Absolutely. Essentials, continue to be the most important thing that people spend money on. You always have that ability to reach into those non-essential categories like entertainment or travel or things of that nature and pull back a little bit. But not everyone has that luxury when it comes to just managing their finances.
When you look at the data, are there certain metrics or data points you would look at, Chris, to show that would signal to you, okay, there's real strain going out there? Would you be looking at, I don't know, is it delinquencies or higher balances?
We do. We look at hundreds of statistics, obviously, to understand both on the spend side as well as on the payment side. From the payments perspective, we see continual resiliency. Obviously, coming out of really the lows of the pandemic when losses and delinquencies were really, really low, that's normalized and actually, from an industry perspective, has started to come down. And so you do see a pretty healthy consumer. Obviously, as I mentioned, unemployment continues to be strong, and so you see good payment behaviors from consumers. But spend's been resilient, but they're changing how they're really spending to make sure that they can manage their budget.
We always hear, Chris, about the kind of the K-shaped economy, right? I think my entire adult life I've heard about the K-shaped economy. But I guess my question is, is there any evidence that that's becoming more pronounced than it used to be?
No evidence that we've seen necessarily that's pronounced. Obviously, the more affluent someone is, the easier it is to sort of manage your way through higher prices or higher unemployment. So that's definitely the case. But we see strength really throughout the ranges of income. Any
last question? When you look through that data, I'm just curious. Anything that surprised you in terms of themes and trends?
The only thing that really surprises me, and I've seen this a lot too, is like the anxiousness of the U.S. consumer is always pretty high, but they figure it out, and they come up with ways to, extend payments, change what they're spending on, buy less, eat less, and so, the consumer, while anxious, and I've seen this trend over my career, where the literacy of consumers is so much higher today than it was before. And people are concerned about their credit scores. They're concerned about how they're paying for things. They have more information to make better decisions. Those things really help you as things kind of go up and down. But the anxiousness tends to be a little bit higher, but it prepares consumers to be able to deal with it. Yeah. And I think that's really important.
Resilience, there we go. Chris, thank you, sir. Appreciate
it. Thank you for having me.
Time now for a look at some after-hour movers. Let's start off here with Reddit. That company reporting results for the third quarter. Daily active users, that did top Wall Street's estimates, driven by international growth. Revenue saw 68% growth year over year and topped expectations. Looking ahead to the fourth quarter, the company forecasting better than expected revenue, seeing a range of $655 to $665 million. Moving over to Coinbase, that company posted third quarter earnings, the stock moving higher after that report. Total revenue in Q3 coming in at $1.9 billion for Coinbase. That's up 25% quarter over quarter. Transaction revenue is also up by 37% to $1 billion for the quarter. And taking a look at Strategy, formerly named MicroStrategy, of course, shares moving higher after announcing results for the third quarter. The digital asset treasury company reporting operating income of $3.9 billion and net income of $2.8 billion in Q3. Diluted earnings per share for Q3 coming in at $8.42. Strategy CEO saying in the release that the company increased its Bitcoin holdings to more than 640,000 and have raised $20 billion year to date. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moves stories affecting your wallet.